Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, that is in the global markets, all the three US indices witnessed profit booking from higher levels. However, if we see the major trend of these indices is still bullish as they are trading above their short-term and long-term averages. S&P 500, the immediate support for S&P 500 would be the levels of 5,200, 5,230 levels, while on the upside, any sustainable move above the levels of 5,320 will lead to a sharp upside rally towards the mark of 5,400 followed by 5,550 levels. If we look at Brent crude for the fourth consecutive trading session, Brent crude ended on a negative note. Going ahead, the zone of 80 will act as the immediate support for Brent crude. Any sustainable move below the levels of 80 would lead to further selling pressure in the index. If you look at dollar, the US dollar index has surged above its 20 and 50 EMA levels on Wednesday. However, we feel that it could continue trading in a range between 104.30 and 105.5. Breach of these levels on either side would lead to a trending move in the dollar index. Now coming to our markets. So in trade yesterday, like the saying goes, the sky is the limit. This phrase aptly describes Thursday's performance on benchmark index. Nifty opened the session on a positive note and continued to build momentum right through the day, ultimately closing at record highs above 22,950 for the first time ever. The index also witnessed a significant gain of 1.64% in intraday trade. In addition to this, Nifty not only marked a fresh all-time high but also achieved a breakout from the rising channel on the daily scale. The breakout indicates a potential of the continued bullish momentum and further upside in the market. Furthermore, the daily RSI has also surged above 60 mark for the first time after 26 trading sessions. On the derivative front, May futures has surged by 1.52% and the cumulative open interest of the current, next and far series has surged by 6.05%, indicating overall long built up in the index. If you look at the constituents within the Nifty 50 index, in trade yesterday, 15 stocks have witnessed long built up, 28 stocks have witnessed short covering rally, while 3 stocks witnessed short built up and 4 stocks have witnessed long unwinding. If we look at the May series put call ratio for Nifty, it currently stands at 1.35%, clearly indicating that there is more put writing in comparison to call writing at the current juncture, and buy on dip strategy could be considered in Nifty. Looking at the OI data, so we have 23,000 strike having this highest open interest, call open interest, followed by 23,100, and on the put side it is mainly seen in 22,900 followed by 22,800 strike. These technical and derivative factors indicate that the index is likely to continue its positive momentum and test the levels of 23,100 followed by 23,250 in the next few trading sessions. On the downside, if we see the zone of 22,800, 22,770 is likely to provide cushion in case of any immediate decline. However, one should not chase prices at the cost of quality, especially in the case of mid cap and small caps where there is a steep run up which has been witnessed. Now coming to Bank Nifty, so after repeatedly finding support at the lower trend line of the rising channel closer towards 47,400, 47,500, Bank Nifty experienced a sharp upside rally in trade yesterday, closing the session above 48,700 levels with a gain of over 2%, significantly outperforming the Nifty index. On the daily scale, it has formed a sizable bullish candle. Along with this sharp upside rally, the index has surged above its 20 and 50-day EMA levels. Most noteworthy, the daily RSI is about to cross 60 mark. On the derivative front, if we see, the May futures has surged by 1.80% yesterday and the cumulative open interest has dipped by 0.52, indicating short covering in the bank index. If you look at the OI chain, 49,000 strike has significant call open interest followed by 49,500. On the put side, if you see 48,500 has significant open interest followed by 48,000 strike. For the May monthly series, the put call ratio currently stands at 1.2. Going ahead, the index is likely to continue its positive momentum and test the levels of 49,200 followed by 49,500 in the short term. While on the downside, the zone of 48,500, 48,550 will act as the immediate support. Looking at the key indicators, so in trade yesterday, the volatility index dipped by 1.57% and ended at 21.46. Considering the current chart structure, it seems likely to continue its northward journey and test the levels of 23 followed by 26 in the short term ahead of the election results. Despite a sharp rally in frontline indices, the advance decline ratio favored declining stocks yesterday. This indicates that the upside momentum was mainly driven by the large cap counters, while the mid cap counters did not participate in the rally yesterday. Presently, with the Nifty index components, if we see 88 stocks are trading above their 20-day EMA levels, making a significant increase from 64% from yesterday's trading session. This suggests a sharp uptick in buying interest in the large cap counters. Now looking at the sectors in focus. So among the sectorial indices, we have Nifty Bank and Nifty Financial Services have witnessed a smart rebound from the lower levels. They are likely to continue its positive momentum in the next couple of trading sessions. We also have Nifty Auto, which marked a fresh all-time high in trade yesterday. The current chart structure indicates strong upside rally in the short term. Coming to the FII DI data, so both FIIs and DIs were net buyers to the tune of 4,670 crores and 146 crores respectively. FI long short ratio also for index futures witnessed a sharp uptick. It moved towards 42.11 from 30% on a net basis. This as they purchased about 1,21,415 index futures yesterday. On the stock futures front, FIs have bought to the tune of 1,32,834 contracts, while on the options front, FIs sold 53,769 call contracts and they simultaneously sold 78,890 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.